Good morning, everyone. This is Marshall Giller bringing you the morning comment for February 20th. It looks like the talks between Greece and its creditors will come down to the wire. Germany yesterday rejected Greece's request to extend its rescue package by 6 months, but the Eurogroup of finance ministers will meet today at 1400 GMT to discuss it anyway. Germany and several other countries believe Greece should commit to fulfilling the same conditions that it agreed to under the previous administration, something that Prime Minister Tsipras has vowed not to do. All is not lost yet, however. The finance minister's deputies met for 7 hours yesterday and reportedly are, quote, close to an agreement but subject to political discussion, unquote, according to market news. Also, it may be significant that this is a 3-day weekend in Greece and in Cyprus as well. The same holiday was used in Cyprus in 2013 to impose the haircut on depositors in Cyprus's banks. Now, even at this late date, the FX market remains remarkably calm about the outcome of the talks. Not just in the FX market either. Greek bank stocks rose sharply yesterday, indicating that someone believes a successful conclusion is likely. So, with the market already assuming a successful outcome, news of an agreement probably wouldn't have that big an impact on eurodollar. At best, in my humble opinion, we might go back to the resistance line of 114.50. The surprise would be a failure to come to an agreement. That would probably start people thinking more seriously about the consequences and raise the risk premium on eurodollar, meaning it could head back to the lows of 111, the figure. Yesterday's U.S. indicators gave no change in the picture of a continued steady but unspectacular growth in the U.S., so people are starting to think about what Fed Chair Janet Yellen is likely to say next week when she gives her semi-annual testimony to Congress. She's likely to be more in line with the hawkish comments that we've heard from other FOMC members recently, which could boost sentiment for the dollar. As for today, needless to say, the highlight will be Greece once again. That'll be the focus of attention. Outside of that, Friday's PMI day. China's on holiday, so it didn't announce its PMI. The day started off with Japan's manufacturing PMI for February, which fell, contrary to expectations. Now, once the election in Japan is over, the election in April is over, I expect the administration's attention will be turned to producers rather than consumers, and we're likely to see more willingness to talk down the yen. During the European session today, the preliminary manufacturing and service sector PMI data from several European countries and for the Eurozone as a whole are coming out. The manufacturing PMIs are expected to be higher, which could suggest that Eurozone economies have gained momentum in 2015 and could strengthen the euro, at least temporarily, assuming nothing happens with Greece. In the UK, retail sales for January are expected to fall, a turnaround from the previous month. In the US, the preliminary market manufacturing PMI for February is coming out, but people mostly pay attention to the ISM index. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX Global, wishing you solid trading.